All right, and moving on to what's brewing today, new age beauty brand RENÉE Cosmetics has raised 100 crore rupees in a Series B round led by existing investors Evolvence India and Edelweiss Group. The current funds were raised at a valuation of about 1,200 to 1,400 crore rupees, which is a 60% increase from the previous round's valuation of about 850 crore rupees. Now, through all of these rounds to date, RENÉE Cosmetics has raised about $45 million in total. Joining us now to discuss the company's funding and its plans ahead is Ashutosh Valani, the co-founder and director of RENÉE. Also with me is my colleague Shruti. Ashutosh, welcome to Startup Street. Thanks very much for your time here. This is Ritu. Tell us about this 100 crore funding, the valuation jumping by 60% since December 2022 when you last raised money. What enabled this kind of jump in valuation and how exactly will you deploy the money?
First of all, thank you very much. Thank you for having me on the show. So the plan is that our revenue has already jumped 3 times from our previous funding. So the more focus was to penetrate offline because we feel that beauty and cosmetics, it is very important that our customers get to feel the product, right? We are into an instant sort of gratification business. So it's very important that people come, experience, feel the product, swatch it on their hands, like it, and then buy. So this particular round of funding will be majorly into offline and sort of catalog expansion.
All right. Hi, this is Shruti quickly stepping in. You said the money will help expand the business further, especially, you plan to further penetrate offline. But can you throw some light and elaborate on what this would entail in terms of your product portfolio?
Sure. I think, RENÉE has always stood out as one of the most innovative, makeup and color cosmetics brand in the country. So we want to really set up our research and development and offer more to the consumers. Now, currently, we are actually present in 1,200 offline shop-in-shop models with about 1,200 plus beauty advisors selling every day. We want to double the footprint within the next 12 months. While we do that, we also want to bring a new set of innovation because what we feel is in the last 20-25 years, not a lot has been actually achieved and done into this particular space and segment. And we want to be that primary driver into creating newer products. And also to the market, we want to offer more for less, as in more product for less amount of money.
Well, Ashutosh, as you earlier said, the touch and feel for these beauty products is very important to the customer. So in terms of your omni-channel presence strategy, 40% of the business is still coming from offline channels, as we understand, which you want to take up further. What would this mean in terms of your retail expansion plans, whether it is shop-in-shop stores or are you planning any standalone stores as well? What's the strategy?
Sure. So I think plan is divided into three parts. One is to increase our 1,200 stores into about 2,500 stores, which is shop-in-shop. We also want to increase the footprint into the GT stores, which is the general trade stores. We actually want to commoditize certain makeup products, which are a daily use product, say something like a kajal. So we were one of the first ones to bring a kajal within a built-in sharpener. So we want that to expand into about 25 to 30,000 stores across tier 1, 2, and 3 cities. The third part is to also open our own stores. We have about 5 to 6 stores, and we want to take those to about 50 odd stores in the next 12 to 18 months. So this is the trio strategy for expanding offline. The plan is to increase this 40% offline business and move it to about 50% of our total business in the next 12 months.
All right, so you plan to increase the offline business to 50%, and thanks for giving us a lowdown of your omni-channel play. But Ashutosh, let me now quickly talk about the beauty space. You're competing with peers like Lakmé, Sugar Cosmetics, MyGlam, as well as globally well-established brands. How are you differentiating yourself, and what kind of market share do you hope to be able to capture in the India market?
See, I think the market in itself is growing, right? So to answer your question, what we feel is that the unorganized sector is now quickly moving to the organized sector. This 1 lakh plus crore beauty market is growing by 15% CAGR at the minimum, right? We don't see the names that you mentioned as one of our competitors, but we see them as friends because all of us combined are actually spreading the knowledge of using the beauty products. We feel that the Indian market is still at a very nascent stage. So we want to participate in this and grow this. See, currently we are at a ARR of 350 plus crores. We want to grow to about 500 plus crores by the end of this fiscal year. So we are focusing on that. We are not worrying about what all the others are doing. RENÉE has always stood out for innovative brand, and I think that is what is going to be the at the core of how we grow. And that is also going to be one of the biggest sort of differentiator, adding aspirational brand value, adding newer products to the catalog, offering better price, better opportunity, and also being there in the market. I think that is one of the bigger things, availability. A lot of people, a lot of Indian consumers today ask for RENÉE products, but we are not able to reach because of the distribution. And I think that is where we are going to grow from here on.
Well, Ashutosh, it's nice to hear you're calling your peers your friends. But, a final question. You claim to have surpassed this 350 crores annual recurring revenue mark. What sort of growth or revenue and sales growth are you eyeing from here? And how soon will you be, able to become profitable? And I mean profitable after tax.
Sure. So I think in the last 3 years, we have every year we have actually doubled our growth. So we really want to keep doing this till we reach 1,000 plus crore kind of a revenue. So we see at least 100% growth for the next couple of years. Now, that being said, in the last 3 years, we have also halved our losses, right? So first year, we were close to 45% negative EBITDA. The second year, we were close to 30%. This year, we are bound to close at under 10%. So hopefully, we are looking to be profitable in the next 16 to 18 month period. And this is after tax net of everything.
All right, so eyeing profitability in the next 16, 18 months and 100% growth year after year. Ashutosh, we've completely run out of time, but many thanks for joining us on Startup Street today.
Thank you very much. Thank you for having me today.
Moving on, financial services.